Hey everybody, welcome to Mortgage Today for Wednesday, May 29th, 2024, and oh what a day it was. UMBS opened the day down 15 basis points, S&P futures were down 34 points. Ouch. Bonds got hammered yesterday after a lousy auction of 5-year notes, which sent the 10-year yield back above 4.5 to which sent the 10-year yield back above 4.5 to end at 4.55%. Bonds and MBS are weaker on Bonds and MBS were weaker on the morning again today. Despite opening flat and briefly moving into positive territory, it was a bad morning for bonds, with the lower end of the yield curve quickly slipping to even weaker levels. There's no individual overt motivations in terms of data, news, or events. There was a comment about stagflation risk from JP Morgan Chase's Dimon, but that's about it. Minneapolis Fed President Neel Kashkari isn't ready to think about rate cut yet and warned about the possibility of another rate hike in an interview with CNBC yesterday. He said, "Many more months of positive inflation data, I think, to give confidence it's appropriate to dial back." Home prices rose 6.6% in the first quarter of 2024 compared to the first quarter of 2023. U.S. home prices continue to grow at a steady pace in the first quarter. Dr. Anju Vijay, according to the Deputy Director of the FHFA's Division of Research and Statistics, home prices hit a new all-time high. According to the Case-Shiller Home Price Index, regionally, the Northeast remains the top performer with an 8.3% annual gain, showcasing robust growth compared to other metro markets. Conversely, cities like Tampa, Phoenix, and Dallas, which saw top-tier performance in 2020 and 2021, are now growing at a slower pace, but still growing. COVID was a boom for the Sunbelt markets, but the bigger gains the last couple of years have been the northern metro cities. Consumer confidence improved in May, according to the Conference Board. The confidence improved in May after 3 consecutive months of decline, according to Dana M. Peterson, the chief economist at the Conference Board. The present situation index remains well above the expectations index. Few people thought jobs were hard to get, and expectations improved slightly. That said, the expectations index remains firmly mired in recessionary territory, with inflation expectations increasing from 5.3% to 5.4%. Note that inflationary expectations are a key input to Fed decision making, since there are all sorts of ancillary behavior effects that go along with it. We had a 7-year Treasury auction that came in today at 4.65 versus 4.637 expectations. Bid to cover was 2.43 versus a 2.53x recent average. This week's Treasury auctions haven't done the bond market any favors. None of the results have been catastrophic, but all have been moderately weaker than expected. Bonds have responded to all three, and just concluded the 7-year auction is garnering a similar response to yesterday's 5-year. There are certain days and even weeks where the bond market could reasonably do whatever it wants without one outcome being more surprising than the other. This is one of those weeks. Yields began on the doorstep of 4.5 technical level. If markets treated it as a breakout selling cue, the result is today's closing over 4.6%. But if the market opted to maintain the range, it would be just as reasonable to see yields trading under 4.4. Either way, we're left to determine the bottom shelf market movers and explain how those outcomes fit the higher or lower yield narrative. In this case, it's higher, but the point is that nothing was really changed and nothing really decided about the bigger picture. So UMBS closed the day down 12 basis points at 99.69, and the 10-year, like I said, closed at 4.615, but at 99.69. It puts us in this very small range between two different Fibonacci levels, with all of the technicals right above it holding it down. In terms of things you can control, your brain and what you do at work. So we had a great post from our sponsor at wellthatmakesense.com. This is from the awesome Seth Godin book, Lynchpin, which is all about Basically, we have to face it, the day and age of working a job for decades and decades and them telling you what to do and you living a good life and making good money are over. You have to be a linchpin wherever you work if you want to be successful. And this book teaches you about how to be that linchpin that is absolutely invaluable to your organization. So check it out, our sponsor, at www.wellthatmakesense.com.